everybody to Hilltop Wealth Advisors presentation of Personal Finance 101, Planning in a Pandemic. My name is Chris Hostetler. I'll be hosting and introducing the presentation today. I've been a financial planner since 2006, and most of my clients are close to retirement or are already retired. Our main presenter today is my colleague, Brittany Malika. Her clients are mostly young professionals, and she specializes in serving those who have high income but haven't yet built a substantial portfolio. During the call today, if you have a question, please type it in and we'll try to answer as we go. We have a dedicated Q&A time at the end of the call, but both of us prefer to answer questions as we go along, so we'll try to keep up. On your mobile app, if you're logging in through a phone or tablet, you'll see a questions button. You can use that. If you're on a PC, there is a questions section in the control panel. So today's presentation is primarily geared toward younger adults, but we believe there are some useful tips in here that can help everybody. We'd like to start out today by discussing how did we get here. That doesn't mean where the coronavirus came from, but we'll talk about an overview of how the coronavirus and the quarantine are affecting the economy and the markets. But we also want to focus on what you should actually do with this. There's a lot of information and advice out there, and it can get overwhelming and confusing. We want to focus on helping you make better decisions, specifically as this relates to your financial plan and managing your investments. We would also like to discuss the CARES Act briefly. This was a big new law that passed about a month ago now, and there are a number of legislative updates dealing with it, with the coronavirus. The CARES Act is the biggest, and it's sort of a hodgepodge of a lot of different things that relate to financial planning, and we'll just cover a few highlights. And at the end, we will finish with a little time for Q&A, but again, you are welcome to ask questions as you go along, and we will keep an eye on those and keep up. So first question is, how did we get here? Again, we are not trying to trace the coronavirus to its roots, but let's look at the economic and financial impact that we've seen so far. This chart measures something that BlackRock Investments has created, which they've been measuring for years. It's called their Growth GPS, and this looks at economic measures. And before I go much further, I should probably make an important distinction, which is between the economy and the markets. The economy generally measures the wealth of a nation or region, or sometimes the world. It's related to things like employment, earnings, how much you can buy with a dollar or another currency. The market, on the other hand, measures the price that investors are willing to pay for investments. And typically when we talk about the market, we are talking about the stock market, although there are other markets out there. The stock market is generally seen as the measurement of how things are going. And it's easy to get confused when you look at whether the market is up or down and say, well, that means the economy is up or down. Typically, there is a correlation, but over short periods of time, those things can deviate. The markets measure the price that investors are willing to pay for some share of the economy. And as a result, they tend to be forward-looking, the markets do. So you can think of the market as an overall measurement of everybody's educated guess about whether the economy and specific investments are going to grow faster or slower, or whether they're going to shrink. Sometimes the investors' collective wisdom is right, sometimes it's wrong. And the market is really made up of a bunch of humans making decisions. So it can be very irrational and based on fear and greed as much as it is by earnings and other economic measurements. But again, this chart is measuring the economy, and BlackRock's Growth GPS is a compilation of big data and leading indicators. And they've designed this to try to forecast economic growth. So they're looking ahead 12 months, and this measures whether they think the economy is going to grow or shrink. Now, I should clarify, This chart was printed a few weeks ago. I looked at BlackRock's growth GPS today, which was the numbers from a week ago. Now the growth GPS is forecasted to be negative for all of the world's major economies. There's no surprise there, right? With the economic slowdown we've seen from the quarantine and the human impact that the coronavirus has had all over the world, it's not surprising that the economy would be expected to shrink. In the US, there are more than 30 million new unemployment claims now over the last 6 weeks. Stores and companies have closed, mostly temporarily, but I would imagine that a lot of them will find it difficult to reopen again for economic reasons or otherwise. We're also seeing oil prices at historic lows because nobody is traveling and nobody is buying that much oil or gas to go anywhere. So let me stop there and just check to see whether we have any questions. I don't see any yet. Let's look at a few important definitions that will help us make sense of what we're talking about when we look at the markets and the economy. These are not the only market and economic terms that matter, obviously, but these are a few key definitions that are coming up pretty frequently right now. So a market correction is a phrase you hear a lot. That usually refers to a 10% drop in the stock market from the market's peak. Now, this is a very common thing to see a market correction. We typically see a correction about once a year. For the market to drop 10% from its peak, it's just not that uncommon. And when I say the market, I'm usually referring to an index known as the S&P 500, which is a broad measure of US stock market growth. A bear market is similar but more significant. Typically, when we refer to a bear market, that means a 20% drop in the stock market from its peak. So I'm going to pause before I move on to the next definition here and just talk about a little bit of the timeline that we've seen so far in 2020 relative to the market's movement. So on February 19th, the S&P 500 peaked at a cost of $3,386 per share. Just over a week later, on February 27th, we were already in the territory of a market correction. The market was already down more than 12%. So that gives you an indication that the market can, and in this case, did drop very quickly. And on February 27th, nobody was really talking about an economic shutdown at that point. The market was beginning to price in a slowdown, though, and largely that was seen to be because of the coronavirus. A few weeks later, on March 12th, the market had dropped even further. We made it into bear market territory, and this was just more than 3 weeks after the market peak. So we had already hit a 20% loss at that point, which is pretty significant. The next day, March 13th, the NBA shut down. That started a cascade of closures. I remember very clearly, I would say like it was yesterday. It was just 6 weeks ago, but it feels like a lifetime ago. I was in the mountains with some friends to watch the ACC tournament, and the ACC tournament never made it to its finish. We had just enough time to watch our beloved Tar Heels lose. But that was around the time when everything was beginning to shut down, and the market had already entered a bear market. Just a few days later, on March 23rd, the price of the S&P 500 index reached what so far has been its lowest point this year, and it was almost 34% below the peak of just a month earlier. And that was still only about a week into the general quarantine. So that was still very early on for the impact that we've been talking about and following, and this time period that we've all been staying home. A few days later, the CARES Act was passed on March 27th. And since that time, we have seen a general herky-jerky and sort of bumpy recovery, but the market has climbed from the various lowest points that it had hit in late March. As of yesterday, the S&P closed at a level that was less than 15% down from its peak. So that's still down, but at this point, it kind of looks like a general correction. And again, we see those about once a year. So it's not as bad as it was very recently. Question is, where do we go from here? So before I move on, one more term that I would like to define is recession. And this is a decline in economic activity. So again, we want to remember the distinction between market and economy. A recession is when they measure a slowdown or a shrinkage of the economy over 2 consecutive quarters. So 2 3-month periods. And they measure that using the metric of gross domestic product, or GDP. So at this point, by definition, we can't define the recession yet, but it seems unavoidable and inarguable that we are in a recession at this point because the economy is certainly shrinking. Now let's look at one last thing to provide some context for where we are. Now this chart primarily shows the time period from 1900 up until just a few weeks ago. And this is always fascinating for me to look at the growth of the market relative to things that were happening in the world, the real life headlines. Because we always see the real life headlines and assume that those are the major inflection points of economic and market growth. Sometimes they are, sometimes they aren't, but it's interesting to see what happened during specific times. One that I think is particularly poignant right now is very early on in this chart, and that's World War I, which occurred from 1914 to 1918. And it's not so much World War I that's interesting to look at, but what happened right after World War I and even starting at the end of that, which was the Spanish flu. Spanish flu lasted from 1918 to 1920. They estimate that it infected about 1/3 of the world's population at that time, and it killed somewhere between 17 million and 50 million people worldwide. Numbers that are just absolutely staggering and heartbreaking. So far with the COVID-19 coronavirus, we are at about 228,000 recorded deaths. Very serious and significant. And again, these are heartbreaking numbers that we're seeing today. And many of us now know somebody who has been personally impacted by COVID-19, but the numbers still are nowhere near the magnitude of what was experienced during the Spanish flu in the earlier 20th century. And you can see that the Roaring '20s came right on the heels of that. So even with something as impactful as the Spanish flu, we saw market growth and there was economic growth happening after that. Some of it was excessive and along with many factors led to the Great Depression following that. But it is important to see that we can see economic and market growth even after a very frightening event like this. So we do believe there's light at the end of the tunnel. We do think the economy is going to continue growing. The question that we are constantly seeking an answer to is, when is that growth going to happen and how long is it going to last? But our focus today is on helping you make wise decisions with confidence, even in the face of that uncertainty. So now that I've covered some context, let me finally hand the call over to Brittany Malika.
Thank you, Chris. So now that we've got some framework on what it might mean for our economy to be in a recession or for us to have seen a bear market, the question really is, what should you do? And of course, everyone's situation is different, and a lot will depend on when and how the economy can fully reopen. But we do have some tips that will apply to pretty much every investor out there. So we have 4 key things here. Stay calm, stay invested, stay diversified, and keep a long-term perspective. Why do we say this? Because if you don't follow these principles, there's a good chance that when things look bad and they feel like they're going to get even worse, you're going to want to sell and get out of the stock market, which seems reasonable. But you're also probably not going to want to buy back in until things are looking good again. And at that point, you're going to be too late and you'll have missed the full rebound back in the stock market. The market moves quickly and it's really hard, if not impossible, to time the market. As Chris mentioned, if you had happened to sell all of your investments on March 23rd, March 24th, that was about a week into this whole self-quarantine situation, and the news was sounding terrible and there was really no light at the end of the tunnel yet. So understandably a concerning time. But if you had sold then, gone to cash, and not gotten back in the market, you would have missed out on a 30% increase that we've seen since late March. So the key really here is to try to keep your emotions out of investing, which is easier said than done. And that's one reason why having a financial planner, financial advisor can be so important, because we can really act as an objective third-party point of view and help as a behavioral finance coach. Now, another suggestion, a bit on a different note, is to look for entrepreneurial opportunities. This is certainly a unique time. So if you have a new passion or maybe a side business you've been thinking about, now's the time to look into that. Now, if you have a stable job and cash flow is good, there's definitely some opportunities that you should be considering. First and foremost, though, maintain your cash reserves, or maybe even build them up. Having a stable emergency fund, whether that's 3 months, 6 months, 12 months of your fixed expenses, or even just a set number that makes you feel comfortable, having that set aside, we believe, is the backbone of any financial plan, because it really lets you be prepared for the unexpected. So that's number one. But let's say you're comfortable with how much cash you have right now and you have some extra cash. Well, you may want to consider investing. There's a bunch of different ways you can do that, but you might consider contributing to a traditional or a Roth IRA. That's an individual retirement account, so that's not something through your work. And you can make a contribution, depending on your income, to those every year. You could also consider temporarily increasing your 401k or 403b contributions at work, or contribute to a health savings account if you're eligible. We love HSAs. But the real point of any of that is that putting more money in the market while it's down allows you to buy while prices are low, which is great. Another strategy you might want to consider is a Roth conversion. And what that is moving money from a pre-tax account, so maybe a traditional 401k or a traditional IRA, into the Roth version of the same. So a Roth 401k or a Roth IRA. When you move money, that's taxable income to you, so you do pay taxes on it, but then those funds that you move will grow tax-free in the Roth account. And it's especially advantageous to do that when the market is down, because you'll convert a smaller amount and then the rebound will be on the tax-free side of things, which is great. One more item you might want to consider is reviewing your allocation within an account. So that's referring to the mix of stocks and bonds that you're holding, with stocks, of course, being the more risky investment choice and bonds being more conservative. So say your account, you usually try to target 70% in stocks or equities and 30% in bonds. Well, if you haven't placed any trades yet so far this year, we know that the stock market has been down, so that 70% stock is probably less than 70% right now, while bonds have had a great year, so that number is probably higher. So if you make trades to get it back to that target allocation, you're essentially getting to sell some of your bonds while they're up and buy some more stocks while they're down. You can take that a step further even, and instead of targeting 70-30, maybe you switch to a more aggressive allocation where you have 80% in stocks and 20% in bonds. So that lets you buy even more buy even more stock while it's down, and trim some of that bond position that's been doing so well. So those are just some investment ideas. Of course, you want to keep your long-term financial goals in mind and not get too aggressive if it's going to keep you up at night. But so apart from investments, another suggestion to consider is refinancing some of your debt. mortgage rates are very attractive right now, so it's definitely worth finding out what rate you might be able to get if you were to refinance. Of course, you'll want to balance that with the cost to refinance as well as how long you anticipate you'll be in your home. So there's certainly some factors to consider, but it's worth looking into. Lastly, opportunity for small business owners. There's been a variety of government relief options that have become available. So we definitely recommend that you explore those options, know what might be available for you and what you're eligible for. And if you think you want to take advantage of one of these opportunities, definitely be ready to act fast. At the same time, it's also important to understand any stipulations that might come with taking on maybe some of these government loans. You want to fully understand what you're getting into and weigh those pros and cons. Now, if you're unfortunately one of the millions of Americans that have either lost their job or had your hours significantly reduced, you're probably feeling the effects of that tighter cash flow. So we have some tips for you for sure. The first and probably the biggest is to just be adaptive and keep a flexible mindset. You're going to really want to think about what your priorities really are. And maybe if we're talking about your budget and your expenses, start to differentiate between your wants and your needs. With everything closed, it's never been an easier time to trim your expenses. I know my biggest bill is currently my groceries, but just looking at what you're actually spending money on and pinpointing maybe some small changes you can make, promise you that small changes can actually add up really fast. Another suggestion is to consider contacting your debt servicers. So reach out to them and actually explain your situation. And we think you'll really find that some of them will be understanding and will offer you some more flexible options, which could certainly be helpful. Now, on the flip side of things, some options for bringing in more income. Number one, of course, is to check your eligibility for unemployment benefits. And I'll mention this in a few minutes, but the CARES Act did expand on the amount of government unemployment benefits that you might be available for. So certainly worth looking into. But secondly, also consider part-time work or maybe changing your field a little bit. This doesn't have to be a long-term career change, but having some sort of income could be very helpful. And this is just something temporary. So definitely explore that. Then our last big tip is to try to avoid selling or withdrawing from your investments. And that's for a variety of reasons. A lot of qualified retirement accounts will either be taxable income to you if you withdraw from them, and or a 10% penalty for even taking funds out. So you could certainly be penalized for taking funds out of an account. But on top of that, the market is down. Really not the best time to sell your investments. And we really would recommend trying to find other funds if possible. However, if you do need to withdraw, know that you probably have some options. For example, if you have a Roth IRA, you are always able to take the dollars that you have contributed out tax and penalty free. Not so much for the earnings on that money, but the amount you contributed, you're able to get to. So that's one example of an option. The CARES Act has also enhanced some other options though, so definitely keep that in mind, and we'll get into that in a moment. The CARES Act, as Chris mentioned, was legislation passed in March, and there's a whole variety of benefits that came out with that. Like he said, it was a hodgepodge, and so is this list of bullets here, but we'll go through it. We highlighted some of the ones that we thought might especially apply to you. And if you don't recognize the name of the CARES Act, I imagine you have heard of the stimulus checks. That was one part of the CARES Act. For those of you that don't know, individuals could receive up to $1,200. If you file married jointly, up to $2,400, plus another $500 for any dependents that you have. Now, those dollar amounts that they're sending out do decrease based on if your income is above certain thresholds. But if you filed your taxes in 2018 or 2019 with direct deposit, then there's a good chance you may have even already received your rebate check. So that is money that you will not have to pay taxes on, just trying to help people out a little bit, which is great. Then we have a few enhanced options for taking funds out of qualified retirement accounts. The first of which is penalty-free distributions from your IRA or 401k. As I mentioned, usually if you're under 59.5, there can be a 10% penalty on any money you take out of qualified retirement plans. But now, if you call your investment company and say that this is a COVID-19 related distribution, you should be able to access up to $100,000 without that penalty. Now, you'll still pay income tax on it if it's a qualified account, but at least you might have the option of no penalty, which is good. There are some other provisions where you can potentially spread that tax out over 3 years rather than having to pay it all in 1 year, or you could put the money back into the qualified account over the course of 3 years and not have to pay income tax on it at all. That can get a bit tricky, so with all of these suggestions, we would recommend talking to your financial planner and tax professional, but that one especially. So another income help is they've increased the max 401k loan that you can ask for. So not every plan will allow this, but previously, if your plan allowed it, you could ask for a loan of $50,000 or 50% of your vested 401k balance, whichever one is less, but they've doubled that up to $100,000. So definitely another item that you'll want to talk about the details with your financial professionals, but know that that could be an option as well. Next, we've seen they've offered increased unemployment compensation. So that's up to $600 more per week for up to 4 months. So I think that's through July, which can make a big difference if you're in need of the unemployment compensation income. So that's very helpful. Next item is that if you have a federal student loan and you are making payments, your payments are now deferred and there's no interest accruing until the end of September. Not only that though, these months are still counting towards forgiveness. So that's one of my favorite ones. That's a really good benefit. Note that this doesn't apply to private student loans. So if you do have private student loans, we recommend you contact your servicer. Again, explain your situation if you're not going to be able to easily make your payments and see if they can offer you any assistance. Then we have inherited IRA required minimum distributions. This would apply if you had maybe a family member or someone pass away and you were the beneficiary on their IRA account. So you have an inherited account. Usually every year you're required to take out a small percentage from that account, withdraw it. That counts as taxable income to you, and it's called a RMD, required minimum distribution. With the CARES Act, all RMDs for 2020 have been waived, so you will not have to take that out. And actually, if you've taken your RMD already and you didn't actually need it, this wouldn't apply for an inherited IRA. But if if you had a regular IRA with RMDs already, and it's only been 60 days, you could put that money back in. Doesn't apply to inherited IRAs though. All right, almost through. The next CARES benefit is that for those of us, like the 90% of Americans who file our taxes and don't itemize, so we're taking the standard deduction, which means that if you're gifting to charity, you're not getting to write that off on your tax return. This year, you can gift $300 to a charity and get to take the deduction and the standard deduction on your tax return. So $300 isn't huge, but it's a nice little benefit there, and it encourages people, if you can, to be generous. And then lastly, we wanted to mention there are various small business benefits. We won't get into that here, but if you do have questions, we'd love to help you talk that through. So that covers the CARE Act. We have provided some additional resources on our blog. We have a variety of articles. I've written several about some of the basics that we've covered today, like IRAs, but we've also provided links to the IRS site and specifically a Treasury site about the CARES Act. So if you're looking for some direct information there, we've got the links.
All right. So it is question and answer time. We do have one question that came in. So I have a little bit of an answer for this, and maybe Brittany, I'll give you a chance to answer first. But what do you believe accounts for recent stock market gains in April amid such terrible economic data? For example, skyrocketing unemployment and the collapse in consumer spending.
That's a great question. We were actually just talking about that today. There's been so much negative data that has come in, but I think what's really fueled the stock market in the past few weeks is a lot of optimism that we can finally see a light at the end of the tunnel. Seems like any talk about the economy reopening, whether or not we're really ready to do that, that is just giving people a lot of optimism about our future.
I also think it has a lot to do with the federal government's commitment and obvious willingness to provide relief during all of this. And there's a clue for that in the timing of the correction and the bear market and then the recovery. As I was talking through that timeline earlier, I think it was March 23rd was where the market hit its recent bottom. And then it was just a few days later that the CARES Act was passed. And we haven't reached that bottom in the market since then. And that was the period of time where the market started recovering. And it was a few days before the CARES Act was passed that it started to become apparent that that was probably going to pass, because I think it was the Senate that passed it first on maybe the 24th. And that willingness to provide all of these benefits that Brittany was just going through, and I don't think we even mentioned the payroll protection loans that they offered to small businesses, or at least not by name. But all of these programs that were a part of this great big bill show that the government is willing to support the American consumer, taxpayer, small businesses, and that has encouraged people. Now, all of those things do cost money, so it's important for us to remember that just because the government is doling that money out doesn't mean that fixes all of the economic problems we have. We are going to have to pay that back through higher taxes, probably higher inflation, and potentially printing more cash. But that is a problem for another day. I think right now it is clear, and most of us would agree that we need to do something to avoid some of the worst of the short-term economic pain, even while we're trying to deal with the more serious health issue that the coronavirus represents. So we have another question. If you are collecting unemployment, can you still work a temporary part-time job?
I believe that will probably depend on your individual situation, but the CARES Act, part of that allowed for people who were furloughed or working limited hours to qualify for unemployment. So we definitely need to know more details about that specific situation, but I would think you would still be eligible for some. Chris, any?
Yeah, I think that would need to depend on your personal situation. I believe the state rules are different on that as well, so it depends on what state you're living in. So if you would like more follow-up on that, check with us one-on-one after the call today, and we can look up some of that information for you. Have another very important question. When will the Canes play again? I'm going to assume that's the Carolina Hurricanes.
Who else? Honestly, that's one of the biggest drawbacks from what's been happening over the past few months, but we'll be ready for September or October or 2021.
I have been watching much less ESPN and following sports a lot less lately than I normally do. So I haven't seen the latest NHL or other major sports plans. I know the NBA has been talking about resuming the season at least in time for the playoffs, and maybe the playoffs are delayed, but the plans that I've heard the most talk about, I think, are for closed games where you have the coaches, players, and officials, but you don't have fans. That's highly likely, I think, that we're going to see some very odd sporting events when we do come back from this. So let's see if there are any other questions. Don't see any yet. One thing that we haven't really talked about is what Hilltop's economic outlook is, whether we think the recovery is going to be a U shape or a V shape where it would bounce back very quickly, or there's a new one they're talking about, a W shape, where the market drops, the market recovers, which we've seen somewhat so far, and then the market drops again, possibly as more coronavirus cases come up. Maybe there's a second wave, possibly due to the economy beginning to reopen, or maybe it's just economic news that the coronavirus doesn't come back as badly as we thought it did, but maybe the economic recovery from this so far 6-week period of quarantine becomes a longer lasting issue than what is currently being priced into the market. As we mentioned, the market is highly irrational and certainly over short time periods. And there is a lot of uncertainty with the coronavirus. So it's difficult for us to know what is going to happen or whether the market is even properly priced right now. Brittany, do you have anything that you would add to that?
No, I think that summarizes that pretty well. We'll also be filming and then posting our quarterly market video shortly. And if you're watching this recorded, it's probably available. So definitely check that out.
We have another question. In between all the Herald Sun news blurbs, I'm getting much info about investing in gold. Any thoughts on that? Brittany?
Well, I'd say my first thought is it's probably best to not get your investment advice from the news.
Or from advertisements.
Or from advertisements. And while we at Hilltop wouldn't necessarily recommend investing in gold, we certainly do see some investment opportunities in the market. Although, given how the market has fallen, we are looking more at the aggressive opportunities, so within the equity side of our portfolios, rather than a more conservative investment like gold.
Yeah, you tend to see these advertisements for gold pop up whenever there's blood in the streets, as they say, whenever there's bad news and a lot of fear, because a lot of investors will use gold because it has a very low and often negative correlation to stock market movement. There has been a lot of interest in gold because there is a certain segment of the population that worries this is the beginning of the apocalypse and dollars will be worthless in a short time period. We are not of that school, so we are not necessarily, we don't find gold that appealing right now, but as Brittany mentioned, we do see some opportunities. So we don't have any hot stock tips today, but look out for our quarterly investment outlook, which should come out in a week or two. Another question that we alluded to a little bit, but with the government stimulus, where is all of this money coming from? Brittany, you want to take that one?
Sure. Well, hate to say this, but unfortunately, it's coming from future you. Well, like Chris said, the stimulus is definitely necessary right now, and that's really been helpful for the market. And I think we'll see it being helpful for the economy long term. It's really the future taxpayers that are going to be helping out with the cost of this. We'll probably see, like Chris mentioned, higher inflation, higher taxes, and that'll be as a direct result of all of this stimulus.
Yep. And another question, I see another one that has just come in. What do you think about tech stocks? I own a small logistics software company with a cloud-based product, and I feel actually our position has been strengthened. So I'll take that one. Again, we don't have hot stock tips today. It sounds like you already have enough of your stock in that particular company as the owner, but we do think that, Brittany did mention earlier that entrepreneurial-minded people should be on the lookout for new business opportunities during this time period. I personally, I'm not speaking for Hilltop here, but I may be, I just haven't polled my colleagues on this. I think that the tech sector will probably come out of this faring pretty well. We're all learning how to use GoToMeeting and GoToWebinar is the tool that we're using today, Zoom, FaceTime. There is a growing telemedicine movement and telecommuting in general. Everybody's learning how to work from home because they have to. I think if you own something like a logistics software company, especially with a cloud-based product where there's no physical product that has to be delivered, I think there are going to be opportunities. It's going to depend on the quality of the service and product that you offer. But I do think that's going to be one of those things that is stronger after this. And largely because it didn't come completely out of the blue. Telemedicine existed and telecommuting existed before coronavirus happened. So there were a few people out there who were already pretty proficient at doing it. At Hilltop, we had started a work from home policy just back in January, coincidentally, just because our team wanted it and we felt like we were ready to offer that and have some limited work from home capability. We joked with the team, be careful what you ask for. They're asking for some work from home days and now they're all work from home days. But I think the tech sector is probably likely to be a large beneficiary of that general movement. Another thing we have not really talked about is whether the economic impact is as bad outside the U.S. as it is in the U.S. or whether it's better or worse. Brittany, maybe you can field that one.
Yeah. So I think one thing that makes this time so different from the Spanish flu is just how interconnected and globalized our whole world is. We've seen that with global trade, and I think that's partly why this has had such a widespread effect. All that to say, this pandemic has really affected the global economy, and I don't think there's any economy out there that's really fared well. So I'd say pretty much across the board, everyone's taken a hit. Now, we certainly do see some long-term opportunities, maybe in emerging markets, but as of right now, no one's escaped the troubles of this year.
And one thing, the last few questions have been about investments in specific types of investments or specific sectors. We should make clear, if we haven't already, that we are not providing advice or recommendations on this call today. So even though I may have said something disparaging or positive about one of those investment options, that doesn't necessarily mean that you need more or less of it in your portfolio. We would caution you that you need to work with an advisor and actually look at how that interacts with everything else that is in your portfolio. So even if we're not buying a certain asset class right now, there are times when we would buy that depending on what else we have done in the portfolio and how those investments do or do not correlate with each other. So I have not given any investment recommendations today and just want to make sure that you talk to somebody before you make any decisions related to any of these topics.
And in a similar realm, if you listened to this presentation and felt like you had some follow-up questions about your specific financial situation, please don't hesitate to reach out. We'd love to get to talk. Any other questions?
It looks like that is probably all of the questions we have for today. So I would just like to thank you on behalf of myself and Brittany and all of us here at Hilltop. We really are missing seeing everybody, and we're glad that we can do this by GoToWebinar. Just 10 years ago, something like this would not have been possible, and the quarantine would have been much more painful than it is. So this has been a difficult time for all of us, but we do believe better times are ahead. We believe we're going to come out of this. We mentioned it, but I would like to make another quick plug for some upcoming materials that we have coming out. In a week or so, we should be able to share with you our latest quarterly market outlook. that is usually just a 5 or 7 minute video, so much more of a bite-sized chunk. But that will be more specific to economic outlook and what we see in the future, and where we see the markets standing right now. We also are working, I can't give a whole lot of details on this yet because it's still in progress, but we are working on doing another live webinar like this one, probably targeted more for those closer to retirement, and we'll be highlighting some recent legislation, including but not limited to the CARES Act. There have been some other pretty significant legislative updates that have happened recently that have sort of faded into the noise so far. So we want to make sure that everybody is up to date on those things. So keep an eye keep an eye out for that stuff. And we also encourage you to call us to set a meeting. We are working at full capacity, even though we are not in the office most of the time. So we're available. Thank you. Have a great day.